Hello traders and welcome to Trading the Trend. I am Dennis and this is my weekend report for week ending March 17th. And I am looking at the S&P 500. See just a tiny little green candle here, pretty much a doji, two dojis in a row. We've actually had two inside candles 2 weeks in a row here, so the market's kind of stuck. Let's close in a little bit. Market's kind of stuck right here. We did have a interest rate increase by the central bank. That was no surprise. The market knew it was coming, so nothing really changed a whole lot. The only thing that surprised me was dollar weakness following that, but we'll look into that when we get into our currencies. All the markets pretty much the same way. Dow virtually unchanged. NASDAQ did have a little bit of an up week. NASDAQ is definitely the stronger of the majors right now, and we could see a NASDAQ 6,000 if this market can continue. Big question is, will it continue? I mean, this type of move cannot last forever, and it's usually when you feel real good about jumping into these markets, that's usually when things will turn on you. So I would be careful right here. Other things to look at, let's look at oil. We had the big down move 2 weeks ago, and this past week it stabilized some. A little, not really a reversal, but it just kind of stabilized while it got back above its 40-week moving average. Now we'll see if that can, if it can find support here. If you back this up a little bit, I mean, it really isn't breaking this uptrend. I mean, this is just a higher low at this point. So we'll keep watching that and move on to our commodities. Gold, after a couple down weeks, we actually got a good up week. Gold actually took the rate increase as a positive. Normally, when interest rates are going up, that would be weakness for gold, but gold is looking at this rate increase as no big deal. They can live with it. So gold moved up. Silver, a little weaker move, but it still moved up too. And the gold miners ended their losing streak, and they were up a bit also. And energy still remains weak. Let's look at the oil service sector. It did finally end its losing streak, but I would not exactly call that a reversal. We'll just have to see if maybe it's finding some support here. Another one that I often use is the ERX, and you can see we're still in this downtrending channel. You know, we want to see it break out of that channel. Either, you know, if it breaks to the low, that's not good. If it breaks out of this to the upside, then maybe that will be our next leg up. If you back out a long ways, you see this thing really has not moved a whole lot. I mean, it's got a lot more upside potential than I would say downside potential. And now let's look at our currencies. First, we'll look at my strong weak rankings, and the euro currently is on top with the Aussie close behind. New Zealand continues to be in last place. Euro was strong and it had a very bad Friday, so it may not stay at that #1 position very long. And Aussie just continues to remain strong. As long as the Aussie is strong, then the U.S. stock market will probably continue to move higher. If either the U.S. stocks start to fall or the Aussie starts to fall, I'm sure the other will follow. Let's get into our currency pairs, and we'll look at it on my stock charts here. And we'll start with the euro, US dollar, and there it is. Okay, we're still in that consolidation zone, 3 up weeks in a row. The US dollar really looked weak following the rate increase. You might expect, at least historically, you would expect the dollar to get stronger after a rate increase. But in this case, it got weaker, and the Fed pretty much tipped its hand that there will probably be a couple more increases this coming year. But they're talking like 1/4% increases, and the market pretty much has decided they can live with that, and they're not paying it a whole lot of attention. So maybe the dollar continues to weaken. I'm not sure I'd want to jump into it with the euro, but the Aussie US dollar might be a better play. Here is the Aussie US dollar, where we had a nice strong weekly candle, and we're right at that strong resistance area. If we can break through there, what is that, 77.50 area, then this thing has a lot of room to move higher. It'd been on a very long-term downtrend, but it clearly has formed a very solid bottom and is now trying to break to a new yearly high. So we'll see if we get that this coming week. And then if we can break through this line, that line then becomes support, and that would be our line in the sand for staying long in any long position in this pair. What else do we want to look at? How about the US dollar yen? Nice down candle. The yen might possibly be a play here if the stock market were to roll over. But until that happens, we'll just have to bide our time. But the US dollar is even looking weak from a yen that's not particularly strong at this point. And then let's see here. Last thing I wanted to look at on the currencies is the euro pound. And here it is. Now we've been forming what looks kind of like a head and shoulders top here. You have your shoulder, head, shoulder. Now it looks like we're forming a second right shoulder, but we did get a reversal from the week before, so we'll have to see if this has legs. We want to see it break below this 0.84 area. If it can get below and hold it, then this thing has room to move to the downside. So that is what I'm looking at, and that's pretty much all I got for you. Hopefully everyone had a great weekend, and I will catch you later.